Joining me now, Rogers Healy, founder and CEO, Morrison, Seger Venture Capital Partners. Roger, it's great to have you on. Thanks so much for joining us.
Thanks for having me. Happy Monday.
Happy Monday. So Rogers, I guess if you take a look at the market, though, not necessarily happy. We had that strong week last week. Stocks seem to be kicking off the month of December on a downbeat note. I'm curious, what's your take on the market's latest action? How are you approaching it as an investor?
Yeah, I should have said happy Monday, right? I was too jovial when I said it, but this happens, right? We come off a high, we come off the Thanksgiving week, we come off, Black Friday, and all of a sudden Cyber Monday hits, and we see, reality kind of start to kick in, and this is pretty normal, right? We look at the markets all day, just like you do, and a lot of what I do is raise money, for consumer brands, and that's usually a pretty tough vertical to raise money for. And when the markets are not performing well, people aren't investing in the alternative market. So, it's kind of expected. We're seeing Bitcoin take a dive. We're seeing, the Magnificent Seven. Those things are actually starting to come down a little bit too. But, this is the fun of the roller coaster of the public equity market that we've seen really since day one.
You mentioned crypto. I'm curious how you're looking at the sell-off that we're seeing in Bitcoin, specifically trading around, 85,000, more than 30% off the October highs. Yep. What does the risk off mentality there tell you about the broader market?
I think that I still don't frankly understand crypto. I'm not personally invested in crypto. I've never purchased anything with crypto. I understand that it's here to stay, but I'm looking right now, it's down almost 7% for the day. And those are some really, really big numbers. But we also got to remember that only 2.5, 3 years ago, crypto or Bitcoin was at, I think less than $15,000 or $20,000. So there's enough people driving these markets that we're going to continue to see, the relative volatility. But it's December, and this is usually a slower time of year across the board. And I think that we're seeing that, people are starting to speak a little bit, but reality's starting to catch up, and the cost of living across the board has gone up. The cost of food has gone up. The cost of gas has gone up again. And so, I think people are probably starting to sell off a little bit because most likely they have pretty significant wins in their account.
Yet the S&P 500 is still only 1% away from all-time highs. So What do you make of that discrepancy? Because the picture that you're kind of painting doesn't seem all that great, and yet we have a market that continues to really power ahead, even despite, maybe a rough November.
No, look, I'm a very positive guy, and I'm a positive investor. And I think that, when you raise money for a living, you have to make sure to find, the bright spot in everything. But, it's been 8 or 9 months of just being like, oh my gosh, another record day, another record day. Should I go and sell out my portfolio now and put it into something that's a little bit more stable? But it just continues. And I think that even if the volatility and the shakiness lasts for another 1 or 2 weeks, we're still riding an incredible year, right? And I'm hoping that next year is the year that we see significant M&A activity, right? I'd love to make some money myself, and a lot of these deals are privately held, and you're starting to see these IPOs that that are backlogged. There's so many companies that are ready to IPO, and we thought this was the year. So hopefully next year, especially early Q1, we start to see some real positivity in the market, which again will probably go and spur another really great bull run, which, who knows what's going to happen.
All right, so bring us up to speed on what's actually happening in your neck of the woods when it comes to raising capital and really just kind of the timing of it all. What's investor sentiment like right there right now?
I think it depends on the deal. Most of what we raise money for, I'm based in Dallas, and we do deals all over. Like we were in a deal called Pathwater, we're in one called Sanzo, we're in a Pearl Snap company. And I think that, it's very a la carte, which takes a certain personality to do that. But, we're seeing people that historically would go and write a check and kind of take a flyer and write it out, ask some more questions, right? We live in a very educated society, and people have access to stuff that they didn't have access to a few years ago. But it's different. There's a certain type of investor that really prefers private equity deals versus public, right? They like making sure their money is at work, but the difference between what I do and what a stockbroker does is that with our deals, they get to get involved. And I think that's actually part of the fun, and it's stuff that, I like doing. I was an active investor before I went on my own. But yeah, the public markets can really help what I do, or they can make it really challenging. And, the last 7-8 days have been unique, but there's always money out there, and there's always people that want to go and have a different experience with their capital.
You talk about next year as hopefully being the year that we see more M&A, more IPOs. We have seen quite a thawing, at least in that market. So would private equity do better at the expense of the stock market, would you say, or can they both do well in 2026? What's your outlook?
Honest to God, if I had a crystal ball, that I would invest in crystal balls. That's the greatest investment you can make. Yeah, I think it's all going to help each other. And my background is real estate, like we've talked about before, and the real estate market continues to perform incredibly well, and that's simply because of supply and demand. So look, if the public markets continue to perform well, it's going to help everybody, right? Except for maybe interest rates, which is a separate conversation. But interest rates went down a couple weeks ago as well. So, I don't think it's a matter of when is the sky going to fall or when is the music going to stop. I just think that stuff is eventually going to level off, and maybe that's what's happening. But again, we're still at historic highs. You said a minute ago we're this far away from having the best performing stock market ever again, and these are conversations we've had for 18 months. So I think there's definitely some people that are a little bit skittish. The AI stuff is crazy. Is it a boom? Is it going to bust? Who knows? But something's starting to slow down, and I think it obviously starts with the public markets.
Okay, so let's bring it back to the public markets. Being this close to those all-time highs, I'm curious about what's on Rogers Healy's shopping list as you head into year-end in 2026.
Well, my oldest daughter wants a monster truck for Christmas, so that's on my shopping list, and a train set. But the stuff that I invest in, the stuff that my wife and I invest in the public markets, it's the stuff that's kind of the no-brainer stuff. It's the household names. It's the stuff that there might be a little bit of a change on a daily basis, but it's probably not going to bust. It's probably not going to change your life, but it's safe, right? The stuff that I invest my personal money in with a little bit larger checks, it's the more volatile stuff that could be a unicorn or it could be a zero. So, I think we're going to see this. But what's fun about what's hopefully happening next year is we're going to see some of these household brands that are maybe celebrity backed that are going to IPO. And I think that's going to bring a whole different audience of investors to the market. I was an early investor in Liquid Death, and I think Liquid Death hopefully could be something that brings a different audience of investors out there. And I think that's what's really needed, is instead of just the fancy people suit and tie stocks, let's get the everyday household brands that people use and are loyal to already.
Okay, so just break it down a bit more for us about what you mean by household brands, because my head goes to staples, and you mentioned water, although Liquid Death maybe not necessarily considered a staple, but household brands could also be Apple, iPhones, Roku, those type of stocks. So what do you mean by household brands?
So we invest in products. We're an investor in Waterloo. We're an investor in Sanzo. We invest in stuff that you're probably not going to question purchasing, even if the public markets or the economy takes a massive, massive adjustment. And I think that when you see, again, Kim Kardashian, like her or love her, everyone knows her name. And she's the founder of Skims. And Skims has been slated to go public for a while. It still hasn't happened. Jennifer Garner, a very well-respected actress, was the founder of Once Upon a Farm, which we all saw last week, that their IPO got delayed till 2026. So I think stuff like that, the stuff that's a true consumer good, a true consumer product. I have 2 iPhones sitting right here that are charging while we're on TV, which obviously everyone knows Apple, but I think this stuff that, maybe is a little bit more on an everyday basis that you throw away, or maybe you don't, if it's closed, I think that stuff is needed. And I think that's going to bring a whole different audience. Look what Shark Tank did to private equity. Everyone knows about Shark Tank, right? Everyone knows about how to go and value a company if you've seen more than 2 episodes. And I think that to see some of those brands, whether they're on Shark Tank or not, actually be in the public markets, that helps our economy. That also makes our society more educated.
I'm curious, bringing it back to Liquid Death for a second, because it is a pretty expensive water with great branding. As an early investor there, as you look at the current consumer that is definitely much more choiceful in their spending, is this a consumer that will continue to buy water that's more expensive than some of the others?
Sure. I'll talk about, so my favorite water is Pathwater. We're early investors in Pathwater. It's a great founder, and similar story to Liquid Death, right? It's water. At the end of the day, there's not going to be water that is proprietary. It's a matter of where you source it, how you filter it, and how you tell the story. And Pathwater, just like Liquid Death, has told an incredible story. But to go and buy something like this, it's a better for you product. It's better for the world. It's 100% recyclable. That's something that people will pay a premium for, but it's still under $3.50 or $4. So whether you're buying it at the American Airlines Center, at a Mavericks game, you're customizing a Morrison Seger one, or you're buying it at the airport, it's water. And people need that kind of stuff, and they're very brand loyal. And we've seen this over the past few years, like to a degree that no one could have predicted. A celebrity that backs a product has an incredible following already. And if it's the right celebrity and it's paired, like Sanzo, we have Chrissy Teigen as one of our celebrity spokespeople and investors. And because of that, they've acquired an incredible audience for next to nothing. So I think people are willing to pay premium, but to be a hypocrite on that end, that means their spending is at an all-time high, right? So debt is at an all-time high. Credit card debt is at an all-time high, right? The average first-time home buyer is now 40 years old, which a few years ago used to be 34 years old. And it's in large part because they're so brand loyal to companies like Liquid Death and Pathwater. So, people are moving to neighborhoods they historically wouldn't have moved to because they want to continue their spending habits. But, the American dream continues to shift.
Okay. All right. And just finally, because we've talked about where you're putting money to work, both from a business standpoint and from a personal standpoint, bringing it back to crypto, at what point do you say, okay, Bitcoin down 30% from the highs actually looks attractive? What's the number where you get in?
Oh, man. So, I'm a deal guy by trade, right? I think that in real estate, I learned early on that you make your money on the purchase. And, I watch the TV all day like everyone else, and you're like, oh, man, Bitcoin's down like 6-7%. Right? Does it get to $50,000? Does it get to 20,000? Does it get to 80,000? I don't know. But eventually I'll probably do something. I've got friends that got in really early on, and they're really proud to tell you that they got in when Bitcoin was $5,000, right? But it just goes back to, the logical side of it. I've never seen anybody purchase something with Bitcoin, and maybe I need to just get over that because, it's a real currency, and we've got a president that supports, crypto and Bitcoin and all that stuff. But I think at the end of the day, it's probably because I'm bitter that I didn't buy it 3 or 4 years ago.
Do you look at it as a currency, though, or is it a currency, or is it really a store of value?
I don't even know, right? I don't know. I can talk to you all day long about Pathwater or about Sanzo, about Snap's clothing. I don't know, and I think that's kind of the common thing with a lot of people that even have Bitcoin. It's like, what is it? Well, blah, blah. It's like, you don't know either. Right? Like, what are you going to actually buy with it? So, the world is not slowing down. It's only speeding up. And I've learned kind of the hard way not to, you can't avoid change. You got to embrace it. You got to learn it, but it doesn't have to change who you are. But Bitcoin is, it's here. But yeah, to answer your question, maybe if it gets to 50 grand, I'll buy some.
All right. Well, you come back and tell us if you do. Rogers Healy, founder and CEO, Morrison Seger Venture Capital Partners. Thank you so much. Really appreciate your insights.